In this week's episode of the Stockscores Market Minutes, we're going to talk about what swing trading is and how I approach swing trading in the market. Then I will do my regular weekly market analysis. We're going to look at the day trade of the week on ZM and then jump into a Stockscores market scan, all coming up. So what is swing trading? Well, essentially, it differs from day trading in that we actually hold the position at least overnight. So the typical swing trade for me is anywhere with a hold period of anywhere from 2 days to 2 weeks. What we're trying to do is take advantage of extreme volatility that comes when a stock has something significant going on fundamentally, or at least a rumor of such. And so it's those stocks that can make those big moves in 3-4 days. Sometimes it's a couple of weeks. I'll show you an example in just a moment. And what I like to do is look at the action candles on the 13-minute time frame, or sometimes on the 30-minute time frame, to try to find those trade setups. And when I do, I act on them, and with the anticipation of holding that stock for a few days. So let's do a quick look at a example. So this is one that came on November 16th. This is BLNK. And there you can see the action candle breaking from a predictive chart pattern. That's called a cup and handle pattern. You can see the cup, you can see the handle on the right. And what you also should notice is the big spike in volume and the big spike in price. Now then what happened from there, just to give you a sense of how these swing trades play out, that buy signal was way back here on the left where I've got the blue arrow. And you can see that that stock went on a very strong and ultimately parabolic upward trend over the next 5 or 6 days. And then it broke the upward trend line on November 24th, a pretty good reason to exit the trade. But that's what it's all about, is taking these action candles that we often use for day trading and applying them to the 13-minute chart or maybe the 30-minute chart and just holding them for a little longer when they are a really hot stock. All right, so let's now get into this week's market analysis. Starting us off with the US market, and this of course is the S&P 500 short term, and we can see the build of an ascending triangle pattern, which is an optimistic pattern. We're hanging out just below resistance, and now what we want to see is, do we break out from that pattern, from rising bottoms, as a sign that that stock wants to go higher, or that market wants to go higher. So we'll keep an eye on that, watch for a breakout through that blue line. That would be bullish. The longer term chart is good. We have upward momentum, very choppy. You can see there's a lot of volatility in here, and that's an indication of uncertainty, but still the trend is up. We've got rising bottoms on the chart, and I think that this market more likely to go higher than lower. Looking at the NASDAQ 100, also building an ascending triangle on the daily chart, and so I think we could see a breakout soon. Once we can sort of make a strong move up through that 300 level on the QQQ, we'll have a pretty good signal that the market's going to go higher. Now notice that volume last week was very low. Of course, it was a holiday shortened week. And so volume being light, the market being stable, we're not really getting a great message yet. We want to see what the market does when it's sort of back to normal volumes. Now, another important chart the last few weeks is the Russell 2000, which is breaking into this upward trend. And really the leadership in the market has been in the small cap stocks. And so if you are a short-term trader, you're seeing a lot of opportunity right now because the small cap stocks tend to move the best in terms of percentages. And so it's a very good time to be a trader again. We had a little bit of a slow period at the end of the summer into September, and now it's really picking up again, which is typical for this time of year. November till May is the strongest time of the year for the market. And on to the Canadian markets, we'll take a look at the TSX. You can see that we are in an upward trend, and there's no sign of that breaking yet. Longer term chart here, the issue is that this market is rallying into resistance where I expect it will get stuck. So it does still have upside, it does have upward momentum, but we should be a little bit careful about being too excited because markets that rally into resistance usually get stuck at resistance. TSX Venture building a nice stable basing pattern. I think there's some pretty decent opportunities building on the TSX Venture, and we'll see if that continues. And looking at commodities, we've got gold breaking a upward trend line, or not really breaking an upward trend line. The upward trend line is actually still in place, but it did break down from support, and I think we could see some weakness ahead for the gold market. And then finally, the oil chart, trying to break out of a little trading range, fairly volatile, which indicates some uncertainty, but oil is definitely looking better, and so we may see something come of that. And finally, the fear chart. Fear is at a pretty low point. We can see it's falling there. All right, so my ratings then, bullish on both time frames for US stocks. I'm sticking with a neutral rating on Canadian in the long term because of that long-term resistance that the market is bumping up against. Gold, neutral long-term, bearish short-term, and oil, neutral long-term and bullish short-term. US stocks are building optimism and look like they want to go higher in the short term. Canadian stocks also showing upward momentum, but they have resistance to deal with. Gold is struggling a bit and it could break down further. We'll see if that upward trend line can hold. Oil is starting to catch some interest and fear is low. All right, we'll do a quick look at the day trade of the week. And because it was a shortened week, it was a little bit harder to find some trades. Of course, the market closed early on Friday, but on Zoom, you can see the stock breaking from a pennant pattern with the action candle there with a pickup in volume. And it went for a pretty good little move, very short term. More capital intensive. This is a more expensive stock. It takes more capital to trade these. On this particular case, for $100 of risk required 60 shares, which was $27,630 in capital. Margin would be $9,210 with an 8.5 reward for risk ratio. That's an $850 gain, which represents a 9.2% return on the one-day hold. Well, we're going to wrap up the market minutes early this week. It's hard to do market scans. I was going to do a market scan, but I think I'm just going to pass on it because it is a shortened week. That not a lot of opportunity came up at in the charts there. So we'll cut it off quick. We'll be back to normal next week. I hope that you had a great week in the market. To our American viewers, happy Thanksgiving, and subscribe to the channel, like the video, all that kind of stuff. We'll see you next week. Trade well.